How do you see this ESG investing trend going forward? And is the growth in China here, I suppose, sustainable given that?
Yeah, indeed. I mean, if you look at China, the start has been relatively late as compared to Europe, but actually the growth has been promising. I mean, if you look at the number of the ESG fund, it has been doubled in the past 3 years and tripled over the past 5 years. And the AUM as well has been hitting around $250 billion US. So that's, of course, been in line with the government's aim to peak out the emissions by 2030 and carbon neutralization targets by 2060. And I think investors in general, they believe there's less policy risk in the sectors that ESG funds have been heavily exposed. That might include renewables, EV, or battery storage, etc.
Michelle, I mean, do these funds, and I mean, from reports, do they really totally exclude fossil fuel, and highly emitting companies? It would seem that evidence on the ground would not seem to present that case.
No, you're right, actually. We see that around 15% of the companies 15% of the funds, they actually invest in the coal companies. So I think it depends on the ESG strategies that the funds apply. There are so many different kinds of strategies. Like for exclusion, then they would probably exclude those that don't fit in the ESG criteria. But if they choose another strategy, say, for example, best in class, then they could pick the leader in their sectors in terms of the ESG criteria. So if you're just talking about the coal mining company, actually a lot of them, they have been transiting to the renewable as well. Say, for example, China Energy Investment Corp. So it is actually the largest coal producer in China, but it's also the largest renewable company as well. So this company, they are also aiming to boost the renewable capacity percentage from the current 27% to up to 75% by 2035.
Okay, it gives us a sense, because most ESG funds in Europe have been underperforming the index, with Chinese ESG funds recording negative returns as well. Now, will that cool off demand for these type of funds looking longer term?
I think, yeah, temporary. I mean, this year has not been doing very great, and partly also because of the Ukraine war that drive up the energy prices, and as well the interest rising environment is not favoring the technology. But indeed, if you look at the China ESG fund, it has been outperforming the index by around 5% point. Despite its 10% negative return on average. So I think more in long term, the fund managers should have more data or ESG disclosure from the company for them to do better bottom-up analysis to find better stock pick and portfolio diversification as well. A recent research actually shows that among the CSI 300 constitutes, the company that rating higher than average ESG score did have a better return than the rest.